moving into trading idea of the day, we start with the first one. Will be a Hapsang Industry. The stock has been highlighted in our Traders Almanac back in January, 10 January. It's actually hit our first target, gaining about 6.8%. The movement was rather slow, which is actually expected as the stock, if you look on the share price movement, and the movement will be rather gradual rather than quite solid uptrend kind of move. But regardless, because of trend is still pretty much intact, we think there's decent chance for the current going uptrend to continue, banking on the ongoing uptrend. So if you look on the chart, the recent decline was pretty much kept within 13-day moving average, and you look on the D-trend reading also suggests the current upcycle still pretty much intact. So subsequent uptick in RSI suggesting that overall momentum remain elevated. Hence, we actually reiterate our technical buy with the new and higher target at 89.5 cents, and the second target will be 97 cents, while the cut loss has been revised higher to 80 cents. Risk to reward ratio is quite attractive to 1 to 2.7 with the 5% downside risk and 14% upside potential. We retain the similar quant style, which is quality, with the quant score at 8.2. Moving into second trading idea, we have Kobe Tech. So Kobe Tech, the trend is actually on downtrend, but I think since for the first time, I think since February last year, the stock is actually trading above the 45-day moving average. So this is actually quite important because the recovery from the low of the 1 ringgit and 1 ringgit region is actually has the recovery phase here could actually morph into a new and a stronger upcycle. So we've seen a slightly mild consolidation. This is actually the setup of the new base for the stock. Yesterday again on the back of high trading volume and equally positive reading in both RSI and DMI, suggesting the short-term recovery set to accelerate further, turning into a potential stronger short-term uptrend move. So we think there's decent chance for further upward move. With the technical resistance, we actually place at 1.45 cents and 1.71 cents, while the cut loss will be below 1.70 cents. The risk and reward ratio is actually balanced 1 to 2.8 with a 10% downside risk but 13% upside potential. Last but not least will be Rexit. So one of the reasons why we highlight Rexit, we like the stock despite the recent I would say lower liquidity period, but the trading volume has improved significantly, particularly in the mid of the January. So the recent so-called minor correction is actually has ended, particularly as the stock be quite a strong support within the 100-day moving average and 61.8 Fibonacci retracement level. So a breakout move yesterday on a bit high trading volume has ended this consolidation within rectangle pattern and make it start a new upcycle backed by positive reading in both RSI and MACD. We're expecting the stock to trade higher, with the next technical resistance is actually paired at 1.04 cents and 1.16 cents, while the cut loss will be below 86 cents. Risk to reward ratio is quite attractive at 9% downside risk and 23% upside potential.
Do 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 do.